Hello students and welcome to this second example of liquidations. So in this example I want us to run through what happens if the purchase price is not only paid for in cash but also paid for in other ways, like in this instance the issuance of shares. Alright, so I just want to start by going through the question. I'm not sure how to pronounce the names of these entities, so I'm just going to call it A Limited and M Limited. So A Limited made an offer for certain of the assets of M Limited on the 31st of March 2004 at the following prices. So they're taking over the plant and machinery, 75,000, also the motor vehicles, excluding a Jaguar. Normally they put these notes like excluding blah blah, just underline it, because these are sold then to another third party later, and we will then include them in our step number 6. Then there's also some inventory excluding consumable stock, and there's some trade debtors that are being ceded by M Limited to A Limited at 69,000. They say the purchase price is made up of 20,000 shares of 1 Rand shares that are being issued at 3 Rand per share, and also a cash payment of 222,500. So if I add these totals up on my calculator, I'm just going to do that to make sure. I get 282,500. So this purchase price will have to add up to 282,500, and it does, because 20,000 shares being issued at 3 Rand gives us 60,000. And if we take the 60,000 and we add it to the 222,500, we do get 282,500. Then if we explore the balance sheet of the M Limited, you will find that there's plant and equipment, there's accumulated depreciation on it, there's motor vehicles and accumulated depreciation on it, there are some furniture and fittings with accumulated depreciation on it, and then the total non-current assets add up to 105,850. Then for the current assets, there are inventory, debtors, and bank. Of course, we don't close off the bank in the first step, please remember that. Then for the equities, we have share capital and a retained profit. There's also a distributable reserve, but it seems like it's empty. So the retained profit, aka retained earnings, was 40,500 added to the share capital, 140,500, and then for the liabilities, there was a long-term loan and some creditors that we had to pay. All right, if we look at the additional note number 1, it says that the consumer stock, which is included in the inventory above, was 1,800, and the cost price of the Jaguar 17,500 minus 5,500 accumulated depreciation. So these amounts are already inside the balance sheet. So if we use the balance sheet totals to close off our asset accounts, we will not have a problem. In note number 2, it says debtors consist of trade debtors and also loans to employees of 4,500. Then in note number 3, we have decided to liquidate the company, and the following amounts were realized. So except for the purchase price, there's the Jaguar, which they described earlier, sold for 10,000, furniture and fittings 3,500, and some consumable stock for 400 Rand. Then they say the loans to employees were recovered. And remember, that was a 4,500, so that's a debt collection. And 116,900 was paid to creditors after discount. So we actually owed them, I think, 123 something. The creditors, we owed 123,750, but they accepted a payment of 116,900. And then the 16% long-term loan, which is the non-current liability, was paid off for early settlement. They did not have to pay interest there. The liquidation expenses, 1,400 Rand. Then they say journalize the liquidation process for M Limited, including the cash transactions, and narrations are required. I'm not necessarily going to write the narrations because I'm writing the steps, and the steps are the narrations to what we are doing. So let's explore how we will record this in the books of M Limited as it is being liquidated. So the first step is going to be to close off all the assets that we have. So we have plant and equipment, and we have accumulated depreciation on plant and equipment. Then we also have motor vehicles. I'm going to type the totals just now. We have accumulated depreciation on the motor vehicles. Then we have furniture and fittings. And we have accumulated depreciation on furniture and fittings. And then we have our current asset, which was the inventory and the debtors. We are not closing off the bank account. That's only step 7. And then this needs to be balanced to the liquidation account. So for the plant and equipment, we're going to close off 95,000 with accumulated depreciation of 28,500. So I'm just literally taking the totals from the balance sheet or the statement of financial position. Then 49,500 and the accumulated 16,500. Then there is 11,200 for the fittings and the furniture, and there is 4,850 accumulated depreciation on the furniture and fittings. The inventory was a total of 109,000, and the debtors was a total of 77,000. So if I look at the two sides here, the debits and the credits should definitely be more. So the liquidation account will be our balancing figure, and thus I'm taking all the amounts on the credit side and then deducting the debit side to basically force balance this step. Minusing all the debits, and then we will get the amount that should be within the liquidation account, 291,850. Right. Step 2 is we have to close off and pay our liabilities. Also, the payment is where applicable. So I know we have a 16% loan, and we have some creditors. Then we need our bank account, because amounts need to be paid out of the bank account, and then it will again be the liquidation account, which we use to balance this out. All right, so the loan, it was a total of, I'm just looking at my question now, a total of 50,000. The creditors in the balance sheet was a total of 123,750. Then for the bank account, what did we pay? If I go back to the question, we paid 116,900 to the creditors, and we paid the total loan without any interest, but the total capital we paid in the long-term loan or for the long-term loan. So for my bank account, that would be the 50,000 of the long-term loan plus the amount that was paid to the creditors of 116,900. If I look at the totals here, the liquidation account will need a credit amount to balance. So if I force balance it, basically, on the credit side, you will have a 6,850, and that is then the amount of discount to be listed in the liquidation account that we have received from the creditors there. Of course, it's a credit because it's an income. We need to close off our reserves in step 3. So for step 3, I'm going to take my retained profit, and that was a total of 4,500, and I'm going to put it against the liquidation account. Then we have to pay a liquidation fee. So it's going to be the liquidation account that is the debit, and on the credit side we're going to have bank because it's a payment. And I believe that was 1,400. Right, so far so good. Step 5, we need to record the purchase price. So what I know is that there's definitely some cash that we received. If I go back to the question, It was 22 something, I think 222,500. Yes, the cash payment was 222,500. Then we also had received some shares of the other business. So we're going to say investment shares in the A Limited. This is now a financial instrument, of course, and I think it was 20,000 shares there that were issued at 3 Rand each. And we're going to put these amounts against the liquidation account. And that should then be 282,500, I remember. Right, next step, step 6, is we have to go and sell or show that we sold some of the other assets. And we also had a debtor collection in the form of employee loans. So I am going to increase my bank account here, and I'm going to credit the liquidation account because the asset account and the debtor account no longer exists. It was taken to the liquidation account in step number 1. So if I look at my question, there was quite a number of sales there. We had the 10,000, 3,500 and 400, and then we also had employees who paid their loans, so that's a debtor collection of 4,500. So here I'm going to then record the total should be the 10,000 for the Jaguar, add the 3,500 relating to the furniture and fittings, add the 400 relating to the consumables, and then add another 4,500 relating to the employee loans, which we collect because it was part of our debtors total. And again, the liquidation account will just be credited with that amount. Last step, we have to close off our share capital. We have to close off our liquidation account. We have to close off our bank account. And we will also now have to close off our investment account, because since we have an investment now that we've created in step number 5, they will have to decide how that investment is now distributed to the shareholders. So how many of them will get what shares, but it will have to be divided and taken from the books. So I'm going to say investment shares in Tulia. Right, so for the share capital, that should be an easy one. It was 100,000 Rand listed in my balance sheet. Then I have to go and find my liquidation account total. So please remember, with a liquidation account, it will be as follows. So if you have a liquidation account, the credit side is an increase and the debit side is a decrease. So if I look at the accounts, there was a decrease there. I'm just going to highlight all the amounts in yellow. Then we had an increase there in the form of a discount that was granted to us. Then we had another a liquidation account increase. We had a liquidation account decrease in the form of an expense to pay for the liquidation fees. Then we had an increase of 282,500, and we also had an increase of 18,400. So now we need to go and figure out what amount do we currently have in that account. So I'm going to start with minus 291,850, and I'm going to add the 6,850. I'm going to add the 4,500. I'm going to minus the 1,400. I'm going to add the 282,500, and I'm going to add the 18,400, and that gives me a total of 55,000. And the total that we get to is a positive 55,000. So the balance in this account is positive 55,000. However, the purpose of the step 7 is to close off the liquidation. So in order for this account to be emptied, we're going to make an entry there, 55,000. So we're going to debit that account. So the liquidation account is being debited with 55,000 Rand. Right, let's look at the bank account. I believe the bank account already has an amount in it. If we look at current assets, we need to start with a 22,400 in the bank account already. And so I'm going to start with that and then add and subtract all the amounts that relate to bank. So the first one I see is 166,900 for the bank account, and I'm just going to put it in green. Then I also have a bank entry here, 1,400. Let me just see if I skipped one. No, and then we have a bank entry here, 222,500, and a bank entry here, 18,400. So now the debits will cause an increase, the credits will cause a decrease. So I'm starting with the 22,400 within the statement of financial position, and I'm minusing then the 166,900. I am minusing the 1,400. I am adding the 222,500, and I am adding the 18,400, and that gives me a bank total, a debit of 95,000. So in the bank account, you have 95,000, but the purpose of this is to close off your bank account. So in other words, we're going to have to make a credit entry for this to be 0. So I'm going to say under the bank account, 95,000 to be taken out. And then we also need to take out our investment now, and that was a 60,000, because that investment cannot exist if our business does not exist. So let's just double check if we have done the correct calculations, because this now has to balance. So if I add up here, it should be 155,000 if my math isn't too bad. And if I add up here, I also get 155,000. So I know that all the totals that I've booked here must be correct, because the final step does balance out. All right, I hope that you have enjoyed this video, and I will also be recording another example. So just make sure that you also stay tuned for that. All right, till I see you in the next video. Bye-bye.